So you think your relationship with your insurance company is pretty simple. It's based on a contract, a handshake, and a mutual understanding that if your house burns down, they pay to rebuild it. But I need to start this video with a jarring reality check. That relationship is dead. Right now, as you are watching this, your home is being audited. It is being scanned, measured, and judged, likely without your knowledge and definitely without your permission. We have moved from an era of pooled risk where we all share the burden to an area of surveillance-based segregation.
Welcome to another segment of Let's Talk Real Estate. I'm Kyle Craik and I'm joined by my business partner Mark Maris. And we are the co-founders of Paragon Realty Advisors located in Uptown Dallas. Let me tell you about Tracy Garderman. She lives in Austin, Texas and had been a loyal customer of Travelers Insurance for over a decade. She paid her premiums on time and didn't file frivolous claims. But one day she opened her email and found a non-renewal notice. She was being dropped. Why? Did an agent come to her house and find a problem? No. No human has ever set foot on her property. The email stated she had overgrown trees, and the proof attached to that email wasn't a photo taken from her driveway, it was a satellite image taken from space. Tracy's insurance company didn't send an inspector, they sent an algorithm. And this is happening everywhere.
To understand how we got here, we have to look at how the status quo has shifted. In the old world of insurance, underwriting was reactive. An agent might drive by your house once you've bought it, or if you filed a claim, they'd send a human ladder assist to climb up and look. That model is gone. It has been replaced by what the industry calls touchless underwriting ecosystem. Think of it like a layer cake of surveillance. Layer 1 is your orbital layer. Companies like Planet Labs and Maxar have satellites that provide daily imagery resolving objects as small as 30 centimeters. Layer 2 is a fixed wing layer. Companies fly airplanes over cities taking oblique imagery at 45-degree angles to see your windows and flashings. Layer 3 is a drone swarm. Companies like EagleView use autonomous drones with LiDAR to create millimeter-accurate 3D models. They can measure a granular loss, those little sandy bits on your asphalt shingles, before a human eye can even see it from the ground. This new system is like wearing a biological monitor that streams your vitals to the insurance company every second of the day.
If you put up a trampoline on Saturday and the satellite passes over on Sunday, their algorithm can flag you for a liability risk by Monday. Your house has a digital twin, a virtual version of your property that lives in a server farm. Insurers buy this data from property intelligence vendors, which turn pixels into a risk score. If your score drops, the computer automatically spits out a non-renewal letter. This creates a massive problem called information asymmetry, or the winner's curse. Imagine we were playing poker, but I have X-ray glasses. That is the current housing market. You are relying on backward-looking public data like FEMA flood maps. Meanwhile, insurers are using predictive climate models that look at 2035. If a major carrier drops you because their AI predicts pluvial flooding and you sign with a smaller company that lacks that data, that smaller company won your business only because the smarter company knew it was a bad bet.
But let's get specific about how this actually hurts your wallet. Let's talk about that granular loss Kyle mentioned and the cosmetic loophole. This is one of the most frustrating catch-22s in the modern economy. Let's say a drone spots missing sand on your shingles. The insurer will flag this as wear and tear, which means they won't pay to replace it. However, they will also flag it as poor condition, which means they won't renew your policy. You can't get insurance because of the roof, but insurance won't pay for the roof. You are stuck paying a $20,000 out of pocket just to be allowed to pay them their premiums. It gets even worse with the cosmetic damage exclusion. If hailstorm dents your metal roof, that doesn't puncture it. They pay $0. But try to sell that house, a buyer sees a battered roof and demands a $30,000 discount. You just lost equity because your insurance policy decided that ugly doesn't count as damaged.
This brings us to zero ground for the crisis, the Dallas-Fort Worth Metroplex. If you want to see the future of American housing, look at North Texas. DFW sits in Hale Alley. In 2023 alone, storms there caused nearly $10 billion in losses. To survive, insurers moved from dollar deductibles to percentage deductibles. On a median home, a 2% deductible is $10,000. That is the first check you write. Insurance has effectively become catastrophic coverage. It stops you from going bankrupt if the house burns down, but for everything else, you are essentially self-insured. As a result, the private market is fleeing, and the state-backed insurer of last resort, the FAIR plan, has seen enrollment explode.
Okay, that's the terrifying part. Now, what can you do about it? You cannot afford to be a passive homeowner anymore. You need to practice defensive buying and audit your digital twin before they do. We have a two-step defense plan. It starts with treating your insurance profile with the same vigilance as your credit score. Step 1, get your reports. You have a credit report for insurance called a CLUE report for an A+ report. Download them and look for errors like inquiries logged as claims. If you call your insurance agent and asked about a deductible but didn't file a claim, it might still look like a risk. Dispute these aggressively. Also, go to riskfactor.com to see what the insurer sees regarding flood and fire. Step 2 is physical defense. If you get a non-renewal notice based on an aerial photo, demand the image. Half the time the AI is confusing a shadow for moss. Get a licensed human roofer to write a certification stating that the roof is structurally sound. A stamped letter can often override a drone's opinion. And seriously, cut your trees back. If the satellite sees green leaves covering your gray shingles, the algorithm assumes risk. We are entering the area of predict and prevent. Insurance companies are transforming into regulatory enforcement bodies using the threat of uninsurability to force maintenance. The eye in the sky isn't going away, so your only defense is transparency.
Navigating these massive technological shifts in the real estate market is exactly what we specialize in. Our team's analysis of the Dallas-Fort Worth market is second to none. If you're thinking about buying or selling in DFW and want a partner who can translate this complex new reality into a clear advantage for you, we invite you to schedule a consultation with us at www.paragondfw.com. If you found this video helpful, make sure you give it a thumbs up and hit that subscribe button and the notification bell so you'll have access to all our current and future content. Finally, make sure you leave a comment below. We'd love to hear from you. Thank you for watching this video. I'm Kyle.
And I'm Mark.
And together we look forward to seeing you in the next one. Thank you.